Woke up late, charts on fire, red and green like a funeral pyre. Discord screaming LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump I won't forget. Buy high, die huddling. The gen brain dopamine's controlling. Ride the whale or get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shitty clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I play to win, even if I lose it all again. Buy high, die huddling. Gas fees burn, but I keep rolling. FOMO's gone, greed's the king. This crypto dream's a punk rock thing. In the glass, risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die huddling. Gas fees burn, but I keep rolling. If I crash, at least I tried. In this wild west of blockchain rights. I'll be trading till the lights go out. Charts are noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. But I'll reload, I play to win, even if I lose it all again. Woke up late, charts on fire, red and green like a funeral pyre. Discord screaming LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump I won't forget. Buy high, die huddling. The gen brain dopamine's controlling. Ride the whale or get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shitty clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I play to win, even if I lose it all again. Buy high, die huddling. Gas fees burn, but I keep rolling. FOMO's gone, greed's the king. This crypto dream's a punk rock thing. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape
Good morning, everybody. How's it going? Let me just check on my mic really quick. My power went out recently, so sometimes that messes with my settings here. Properties. All right, looks like it's good. Okay, who we got in the chat? We got Coma. You got Sterling. JR, how you doing, man? Behave or Behave. We got DJ. What's up, man? Steve-O and Grayson. All right, cool. All right, I got to dive into something really quickly because it might be happening soon in the short-term time frame here. So I did a quick review over the market conditions before I jumped on to this live. I just want to see what the liquidity was like because of this kind of behavior that we've got going on here. We can see that we came down pretty aggressively, right? Illiquid drop. We just basically had a large sell order, and now we have these big fair value gaps here on the hourly time frame. And so what we can look for is potential confluence for us to come back up. But it is a holiday. It's Martin Luther King Day, so there's a chance that we might not get very much trade participants today, right? So just be aware of that these are one of those days where it can be a little bit less predictable because the liquidity behavior is not going to be like, well, you know, what we're used to. So yeah, so we came up here originally and we hit our head off of our supply concern that we were worried about. We had a 6-hour order block up here. There's a massive sell wall here as well. And then we ended up getting like a lower time frame, like a 15-minute bearish change of character. We also got a bearish change of character here on the hourly. And that was a big warning sign with that kind of confluence telling us that we're going to be coming down, right? So I jumped in on the short, but I had a bunch of people like following me. So I got out a little earlier. But here is a good opportunity to prepare for potential longs. So we have like this spot of interest where we are now, where we're dancing on top of this 50-day EMA, right? But right now we're fighting against a 97-day previous value area low, right? We just recently fought against that same value area as point of control up here. And now we're trying to potentially get acceptance back inside that value area. But we're also trying to potentially get acceptance back inside this one. So one is super bullish, one is super bearish, right? So we're kind of in decision mode, and there's decent confluences here to help us prepare for longs. But yeah, market structure is going to be key to make sure you're, making the right decisions here. You don't want to be jumping in on a long right after getting acceptance into a valley area and then have it end up getting you stopped out, right? So when if you decide to take a long off of any of the confluences that we have down here, and I'll go over that during the live, then you're going to have to do it cautiously with additional barriers, because if you're not watching out for those barriers, it can easily start to turn around and go back against you. And we'll go through all that pretty thoroughly during the live. So let's go through the internal local price action that we got going on right here first, and then we can start zooming out and we'll talk about the external confluences. So right now we are fighting against that value area low, right? And we can see that we created lower highs. We didn't get any sweeps or anything like that. We started creating lower highs. So that's a warning sign there could be liquidity starting to stack up here. So I looked at the liquidation heat map on the 24-hour time frame, and we can see that we do got some liquidity stacking up here for the amount of there's a cluster of about $100 million right here. So what we can do is we can use that knowledge to tell us that market structure is likely going to eventually get up here, and we got to prepare for that likely being used as a form of exit liquidity to bring price action potentially back down. So when we're diving into the lower time frames, like the 3-minute, it kind of tells the story a lot more clearly. Right, so we have that 97-day value area low confluence. We got like a 3-minute order block. We got some wick levels here, right? So we can mark all these levels to prepare for SFPs as we grab that liquidity, right? And come up, sweep that, and then start targeting If you get the SFP, then you target the most recent pullback prior to the SFP. But if you get a bearish change of character, then you have potentially more follow through for it to come back down. And what I'm kind of potentially looking out for is, that bearish structure and the loss of momentum, and then for us to start targeting this unclaimed low down here, right? We are bearish. The trend is down. So you want to trade alongside that trend right now. It does position us for a potential long, because if we, let's say we take this or we don't take it and we end up coming down, this becomes a great neckline for a double bottom. And then that liquidity could potentially be used as buy side liquidity to drive the market back up. But I would prefer to have this low taken, because of the structure that we got is pretty darn awkward. We kind of teleported down here, right? So our change of character level is like way up here. So we want to have the low taken so we can have a change of character in confluence with a break at that 97-day level. And so sweeps or bearish change of characters in the lower time frames here, look for potential shorts. It may be a low volume day, guys, so you might not even get a trade that you trust if you don't have the volume backing on your setup. What you want to look for with your volume indicator, let me pull it up here actually. Let's see, you can use this, you can just use the generic one down below, or you can use like let's actually pull up a better one here for you guys. So you can let's see, Trader's Reality Main. Yeah, PVSRI volume sweep. You can use this. So when you see a break of the trend, you can see that the volume right now is downtrending, right? And then during the moment we have, like, let's say a bearish change of character and you see volume breaking that downtrend, then there's a larger amount of trade participants jumping in on that setup. So you can use that confluence to help you with your shorts if we get that bearish change of character or SFP sweep. But if we instead get that body close up here and we find support, then we know we're likely going to go up, right? But again, I would prefer for us to go down first before breaking that neckline, so we can get that change of character confluence, because I personally don't like jumping in on long setups like this if it doesn't come with a change of character. Now, let's say we come down here, right, and we get that break of structure. This is technically a form of support. Form of acceptance back inside of this valley area, which is pretty bearish. But the good news is, we came out of this valley area pretty aggressively. We got a break of structure coming out of it. And it's really, really common for us to retrace back in before coming back up, right? And one of those levels that you'd watch out for those retracements is either the equilibrium point, using Fibonacci, or like strong points of control like this one, right? So at this 56-day previous point of control, and a point of control is, think of it like the largest amount of interest in a range, right? And we're coming back into that range where the most trade participants have been active during this area, where the most volume is, where buyers and sellers are. So if we come down to that area, we also have the uptrending momentum here that could help induce a strong bounce, and we get that break of momentum and start coming back up towards these highs up here. So we're basically starting to get a squeeze event occurring between this downtrending momentum and this more macro uptrending momentum right here. And because it's a holiday, it wouldn't surprise me if we just had this a low volume drop, and then eventually around later on in the week we had that faster paced move. Because right now this is today, and right here is Tuesday starts. So it could be a pretty rough day. All right, so that's kind of what I'm preparing for, is just that I'm hopefully, like, we might get the short-term move where we get that bearish change of character and come down. I might not take it depending on the volume. But what I rather prepare for is that low being taken, then we break this high, getting the change of character, and then longing towards the downtrend momentum. And we have a supply concern here in an hourly order block. So that would be my first area of concern, alongside the previous lows. So this whole zone is going to be an area where I might prepare to take profit if we take that long, in hopes that we get continuation structure instead of reversal structure, right? If we get like a bearish change character here, we're getting out. If we get a break of structure continuation here, and we mitigate this supply, then I'm staying in to watch out for our next barrier here, where we have supply concern and the 97-day previous point of control. So if I draw a pathing in a picture perfect world, we came down, take this low, and then we come back up here. So that's what I'm kind of preparing for right now based on the information that we've got. We could look for an SFP here as well if you're an SFP trader. The positioning is okay. I wouldn't really prefer taking this as an SFP. I'd rather take SFPs from like the extreme highs or the extreme lows. Like this is a really good example of an extreme high SFP where we, had that proper pullback, right? And then we came up and we swept that high with this candle, but closed back below the wick, giving us this as a confirming SFP candle. And then we front ran the hourly change of character, telling you can hold your trade, keep your stop loss at the same spot, and then ride it until you have an opposing change of character, which we never had yet. And this could be that moment where you would be warned to take profits off that short. Right? Okay, so that's Bitcoin. That's what I'm preparing for today with Bitcoin. 3-minute time frame. We have our 15-minute orb right here. So if we do take a short up here, we got to watch that for potential opposing confluences in case we bounce and come back up. That could come with the confluence of us like retesting this downtrending momentum and then coming back up from there. But if we get acceptance into the orb and lose that VWAP, I think we're likely going to be coming down towards that wick level low. It's super low volume right now. What do we got in the chat? Who's jumped in? Bro, that call at 4 p.m. is kind of late for me. Can't join, but my spirit will be there. I got you, man. Yeah, I know you're on the other side of the world, but the calls will be recorded, so you can if you have any questions that you are not able to ask because you're not going to be there, you can always message me or post it in like the Ask Kyle channel, and then I can answer it for you within the video if there's something that you want asked. Can we look at Dash and ZEC? Yeah, we can do that for sure. All right, we're pretty much done looking at Bitcoin. Just know that like when you're trading the altcoins that we're about to look at today, that you'd want to have Bitcoin on your side. So if you see any bearish price action activity here, you kind of want to have the confluence of that with your shorts, with your altcoins, like that positioning. And if you're in on any longs with your altcoins, then you know that altcoins are going to get punished a lot more than Bitcoin if we start to reverse from here. I do want to draw a trend line here just to get it on our screen. So we can just watch this buy side, the buyer's momentum. All right, cool. All right, let's go through it. So we want to look at Dash, right? I know Dash had a crazy event recently, basically teleported in price. And we were warned about the retracement because when you have an unsustainable pump like that, it normally gets taken right back. What we got drawn here? Let's zoom out. Yeah, so we warned about the retracement coming back down from here. Zoom out on the... So this is the 8 hour. And let's go to a time frame that most people use. Okay, a 6 hour here. So yeah, here's the crazy move that Dash had. We had this demand zone right here, right? And we can see that we started a fractalized double bottom pattern. So we had a double bottom here. We had a frying pan structure here, which is like, think of it like a cup and handle, but the handle's on the other side. And then we had this larger double bottom posture here, which was kind of induced by this supply here that caused these pullbacks, but the buy side liquidity started to stack and helped drive the price back up, right? Liquidity, when it's above your price action, can be used as exit liquidity for large market makers. So people who need liquidity in order to exit without causing too much slippage in their orders, they depend on that. So when you have supply here, it induces liquidity to be stacked up here and it helps move the price up, right? Allows people to jump in. But you can kind of see that it didn't really help that much because we had crazy fair value gaps here. So that represents a large clearance in the order books from big orders. And now we're starting to come back down to retrace some of it. The good news is we have a demand zone right here that we got drawn. You can refine this box zone a little bit more by, let's say you could use this 6 hour order block, for example, and kind of niche it down. So if you need order blocks in confluence with your strategy, like if that's one of your rules, then you can make your box a little smaller like this. The reason why mine's so big is because these previous highs are also important to watch, is they can act as a form of support and induce a reversal. But I do believe that, you know, with the 50-day EMA coming up through here and the order block almost being in line with that, it wouldn't surprise me if we came down and mitigated some of this demand zone and just to tap those two forms of confluences and drive the price back up. There might be large buy walls following this trend line, and when you have buy walls in the order books, they kind of act like a magnet to the price action, but they also act like a giant brick wall to prevent price action from breaking through, because you can't go lower if there are buyers, right? Unless a seller is able to absorb all those orders. So here we're starting to get kind of flip type behavior. This here is a proper pullback. So we do have a bearish change of character here, right? So we did flip bearish already. This is a key level right here, a neckline level where there's liquidity below. So if we take that, that could be used as sell side liquidity to help drive the price down lower, or it could be used to help drive the price up. Most people, including myself, would prepare for this to potentially induce a bounce. But if we get a close below it instead of a wick reaction, then that close will drive the price down. So we're definitely in a big area of concern for Dash, you know, fighting against the previous valley area. This valley area came from, if we zoom out a little further, this big supply zone right here, where we kind of like mitigated most of that supply when we came up from that giant wick level. So it did get weaker, but still an area of concern that you got to watch out for, especially when you create new supply like this. All right, so I'm expecting Dash to go down based on what we got here so far. And if you're looking more internally on like the 15-minute here, you can mark some of these wick levels. And this is a big key one right here. And we got a wick level right here. This is the last of this demand zone, right? We have what, 47 cents left to mitigate of that. So I'm betting that we'll probably get a double SFP if we sweep that low. So this could be good area for a short-term long, not like a crazy long-term long, but a short-term long to the most recent pullback that we had. Right now it's right here, but we'll probably get one prior to that, and then we can target that, and then we got to prepare for the worst. We might start coming back down from there. So long opportunities down here. Until then, I think it's going to keep going down, and we'll likely induce a range with its EMA confluence and this demand zone in this area, creating a good healthy reset for Dash after this big pump. Okay, so that's Dash. Let's zoom back into Bitcoin's price action at 93K. Looks like we're starting to come up. Let's go to the 3-minute. Kind of bear flaggy kind of behavior. We got this internal momentum now. Well, once this candle closes above here, we'll have momentum that we could draw. When it comes to like drawing momentum, what a really healthy practice is to look for like a bullish change of character and then a follow-up break of structure and then start drawing momentum from that moment. So that most of this is internal right now, but if we get a close above here, I'll start trusting this momentum here. And this momentum will help us for the short confluences. So if we have that bearish change of character up here and we lose momentum and confluence with that, then you start looking at your opposing barriers for your targeting, like this value area high and the orb and the uptrending momentum, in hopes that you get continuation structure. But for now, it's looking like price action's coming up to take the liquidity from these highs, which isn't very much. Most of it's up here. SUI. We can look at SUI next and Zcash. Do we go to 150K on this cycle? I think yes. So I believe yes, we're going to be going up to 160 plus potentially in this cycle, and that's just based on-chain data. And when you say cycle, I do think that we're kind of in a super cycle. Like it's going to be like a 6-year cycle rather than like a 4-year one. That's just speculation based on the behavior that we've got going on right now. We're seeing the crazy macro resets in the on-chain data. Like up here, for example, we have a bunch of forms of confluences that occur with on-chain data, and I recommend you guys watching the video I have on YouTube about that, like trying to call the absolute top. And we only have about one of the rules met for calling the absolute top. And the one rule that keeps being met is the supply and the profit. And right now the supply is about 73% in a profit at our current price, which is pretty high, but the 90% levels, 100% levels are obviously a much more severe. We're actually at a level that we haven't been at since Bitcoin was, since August. And we even went further when we went down to around 86K. The supply and the profit was the lowest it's been since October 2023, which is nuts, absolutely wild. So like, that shows you how much the supply has been passed to new hands, right? So, and if we look at the on-chain data and the relative profits and losses, it shows us that we're barely halfway to the top of the cycle. But if we just go based on like the Newpol chart, I don't know if you guys want me to dive into that, but the Newpol chart basically expresses that we don't get overheated again until we're around 150, 160K. So or based on like the local resistance that we created. When you're looking for break of structure, do you go off of candle closes or wicks? That's a very important question. It will always be a candle close. So if it's not a candle close and you have a wick, that's called a swing failure pattern. And like here's an example right here. So we have, this is an internal SFP. So we have this wick level right here that would have induced a break of structure, but the candle only wicked down below and then closed back above. So that is a, rather than preparing to be bearish and price action coming down from a break of structure, the SFP tells us the opposite, that we should be preparing to be bullish during this scenario. And then what you do is you target the most recent proper pullback, which is this right here. This went a little further, but this is the technical target of the SFP that just occurred, right? So a break of structure, you need to have a candle close above the wick or below the wick when you're preparing for continuations, because breaks of structures are continuation warnings. So you can find you a healthy, like a cleaner example. I could draw it all out, but here's a clean example of a break of structure. I know they're all over the place. I don't know why I'm searching so hard for it. But here's the wick. We had an SFP, right? And then came up and we closed above it, giving us a proper break of structure. And internally, there's a whole bunch of break of structures happening here, of course. I think we got one going on here. We got one going on here, right? And then we had our change of character here. Like that's all internal though. An internal price action helps you prepare for the external breaks, like this one. So you could front run stuff like this using internal structure. So it's really important for you guys to learn internal versus external. When you see stuff like this, and you have like that bullish change of character, we didn't, let's see, proper pullback. I guess it would have been until here. But that'll allow you to front run key level breaks. But not every break of structure, every change of character or SFP is equal. You need to have confluence to stack on top of it. What I'd recommend doing, and it's a pain in the butt to do it, but it's a really good learning experience. You can give yourself like 5 years of trading experience in like a single week if you back tested every change of character, every break of structure. But then you find out what the win rate would be for maybe a 1 to 2 off of like a change of character. But then you would start stacking confluences on that change of character. Like what happens if a change of character occurs after it hits an order block, or after it hits a value area low, or after it hits a VWAP, or after it hits an EMA? Does it have a higher percentage chance of giving you that 1 to 2, or giving you a hit to the technical target or supply or demand? But yeah. Kyle, ZEC. Let's go to Zcash. Sorry for the rant there, guys. Zcash. Let's see what we got going on here. I know Zcash has got some relative strength. Declare if whether you're professional or non-professional subscriber. Why are you doing this to me? Let's see if I can ignore this for now. They're trying to charge me more for my trading view. So when you share your charts and you teach, they try to gyp you. And it's a lot more expensive, guys. It's so much more expensive. Verification is needed before accessing super charts. Well, I guess I can't do TA on alts right now, guys. I'm sorry. That's brutal. The charts are the trading view is trying to charge me more for using their stuff. You had that do it the other day, wouldn't let me do it. We not do it. I'm a non-professional. All right, one sec here, guys. I can see if I can get this situated while I'm on here with you guys really quick. It shouldn't be too long. Country. I'm in Canada. Here we go. All right, we're done. Reload. Sorry about that. Got it all figured out. Oh, it's easy peasy. Okay, I think they do it. I remember them doing that to me before. And the professional plans, even though you get the exact same thing, they charge you like 3 times more. It's bizarre. Okay, let's get to Zcash. So Zcash, we had a few key levels drawn here, these box zones. We were preparing for opposing confluences because it doesn't look like we were preparing for a reversal here. Let's see. Yeah, this was our last key level that we had drawn when we were preparing for shorts, but it definitely did evolve, right? Because we had that break of structure right here. changing our strong low to here rather than here, and we had it evolve to here. So it evolved to here. So this was the new key level since our last TA on this asset, where you could have started a short and then put your stop loss above the strong high, which is right here. We did have a pullback going against us a little bit here, but the 50-day EMA kind of protected us in the strong high. Why you use strong highs and strong lows for your stop loss is because they're usually guarded levels, especially if there are areas of confluence, right? So this was a decently guarded area, and if you didn't jump in on that bearish change of character, then you could have jumped in on this one, right? So, and during any of these lower time frame SFPs to front run the internal break here. So we got that bearish change of character. It came down. Let's delete this now. We don't need that anymore. We can delete this now. This was a great zone of interest for preparing for longs. If you did any longs, they would have been short-lived ones. And supply risk right here, and help drive the price down. We got our new momentum right here. This was completely destroyed last night. We can move this now. We should start drawing our bearish levels. All right. All right, so we got some order blocks here in supply. So I'm going to wrap around the supply issue and just know that you can notate inside your box like the confluences inside this. So for example, order blocks on ceiling. What I mean by like ceiling, I just mean the top side of the box. So you know as we get approach the top of this area, you'll be aware that there's order blocks on the upper side, and that closing above it would completely mitigate this supply zone here. We're starting to see like a rounded kind of top curvature here. We had an SFP. That technical target for the SFP has not been hit yet. The technical target is right here, but we could see a bounce because of the confluence of the VWAP starting to approach. And we have a 30-minute order block right there that hasn't been mitigated yet. So you might see an initial bounce that could prevent the target from being hit before getting potentially stopped out. So just be aware of that if you're in an SFP trade from those highs. So you might get a small bounce here. Nothing crazy, but the big key level we got to watch is still down here. We wicked down there, so congrats to anyone who might have tried to catch the knife on that. I don't like catching the knife on trades, but we had a really aggressive bounce after sweeping this low right here. And on the 8-hour or the daily, this could become an SFP if we don't close below this on time, right? So we have about 7 hours and 52 minutes left before this candle becomes an SFP candle. And if it becomes an SFP candle, then we target the most recent proper pullback, which is way up here, right? And then we have that like double bottom confluence if we break above this high, and this could be the front run to all that. So I'd watch this this daily candle, see how it closes, and then you can use lower time frame structure to define your entry, because what you can do with SFPs, especially daily SFPs, is you can get in between the confirmation. Let's say it closed right here. This is the confirmation, and this is the invalidation point. So you can try to get in between this, right? And they can use lower time frame structure, like the 15-minute, for example, to find like a bullish change of character when we start to retrace back down. So like here, let's say we get a bullish change of character off of like this 15-minute order block, and we still manage to close above 361.01 to get that SFP on the daily. Then you have SFP confluence and you have internal structure confluence to help drive the price back up. right? You still have to watch the lower time frame key barriers like the ones we got drawn here. But once we get above this, this is like great order flow for liquidity. We stack liquidity, stack, right? But along the way down, we keep taking liquidity. So market makers are going to start targeting the upside where all the liquidity is starting to pool. So that's a great trade plan for Zcash if you are a trader of this asset. I don't recommend bouncing between assets too much unless you're familiar with them, or unless you audited their market structure and seeing like, okay, do they respect market structure? Because some assets do not respect market structure. Usually the lower the market cap, the less likely it's going to respect market structure rules, where you'll have like a strong low, for example, being respected. If you see, for example, like something that keeps changing, having constant changes of character and like over and over and over again like this, then those are the ones that you kind of like want to avoid. All right, so that's Zcash. I hope that helps you out. So just a quick recap. You want to have the daily candle close above this orange dotted line at 361.01. And you want to have low time frame internal confluence structure to kind of give yourself a good front run entry right after it confirms. If you look at SUI, it got destroyed last night, did it? I'm betting a lot of alts got destroyed from Bitcoin's little drop there. SUI. Yeah, last time we looked at SUI was on the 12th of January. What were we looking at? Likely shorts, eh? Yeah. Crazy spikes. So this was this here was the 12th. Right? So we draw out our fixed range volume profile in preparation for an SFP here. Whenever you see these orange dotted lines, usually means I'm preparing for a sweep and then a return back up. But if you get a candle close below it like this, you got to be hyper cautious or rotate to a higher time frame. All right, let's delete this. We delete this. This is a key level. If you got a candle close above it, we'd likely go up, and then we'd watch out for the supply concerns here. We mitigated this. We mitigated this. We should mark our wick level highs here now. There we go. So now we can prepare for SFPs here again with the confluence of this unmitigated zone here. But yeah, look at that. So it lost its 50-day EMA, so it has a little bit of relative weakness to other assets that are still holding their 50-day EMA. So it lost this whole demand zone in one little swoop. We're starting to get that descending regression trend. So it is moving opposite to a lot of assets right now, where we're starting to get like ascending regression trends right now. Okay. So we mark this low. I do want to look left a little more first before diving too much into that. So we do have previous valley area data. Delete this, delete this, delete this. We're at a previous point of control right now. So that's what's holding us up right now. It's this big key area of interest. We have this range inside of this more macro range. Yeah, so we have valley area low confluence with point of control. So let's mark this up here. Big volume node interest. Mark as the previous point of control. The age of the point of control is 29 days, so it's pretty significant. And time builds strengths with ranges, right? Time builds strength with your point of controls, your valley area lows, and your valley area highs. And we delete this. It's not very relevant. We got a 4-hour order block here. That could be important. but its placement isn't very nice. And the reason why I say that is because if we get a bullish bounce off of this, we have to watch the point of control acting as a form of resistance, and it can drive the price back down. So it'd be good for a bounce, but you need to have the follow through of closing above the point of control after we bounce off that area. And depending on whether or not we get an SFP here, if we get that sweep, we might get that bounce off the 4-hour order block in confluence with that. So if we close as an SFP, and just have the only thing I have to be mindful of is that previous point of control. So we got our downtrending momentum here. So you can see that we're riding off of that previous point of control right now as a form of support. We're starting to get a break of this neckline. This is the downtrending momentum, the pace of the sellers. Unfortunately, this is all an inside bars pullback. Let's see. Oh, but we breached the low. Okay, so we're getting the break now. I'll just be a little cautious. I would wait for like a lower time frame retest and then higher high. This is a 3-minute time frame right now. So right now we're retesting these previous highs, potentially as support. It's an inside bar pullback, so we kind of want to break below that candle, this candle here, so it's a proper pullback, and then get that higher high. And then we have to watch the VWAP and confluence with these wick levels along the way up, in case the VWAP acts like it usually is, a big king, and just drives the price right back down. So always watch out for the VWAP. This is an indicator that I recommend everyone to have on their screen, no matter what strategy they trade. And think of it as the fair value price for that day. Like there's a lot of trade participants prepare for VWAP tests for their confluence for their trades. All right. So that is SUI. I hope that helps you out. But yeah, it looks like it's trying to make that journey back up. We just need to close above this wick level that we got right here. Like full body candle close, at least in the 3-minute, and then we can start preparing for it to go up to that that VWAP right here. If we get continuation structure, then awesome. I would prepare for it to stop around here. We got that order blocks right here as well. So this will be your next spot that you prepare for your head to be hit, but you'll be above the VWAP at that point, so the VWAP can act as support to help you with the continuation. So this would be, if you think about it like in TP levels, this would be like TP1, and this would be your TP2 kind of area. And then your TP3 will be when the liquidity starts to go cold, like up here, like 161 area. I can keep that pathing on there for you guys. We do have the SUI chart, so when you go to the Discord, you just type in !charts, and then you'll get the links to all my charts there. I might be discontinuing sharing my charts to anyone who's not a member though, because I keep getting messages of people apparently selling that information. Like it's absolutely bizarre. So yeah, just be aware I might be changing that up so that only members can have access to it, which is kind of a bummer, but let's mark up this. There we go. So that's SUI. Just a short-term potential move here. Nothing crazy. Looks like Bitcoin's still holding this momentum a little bit. We bounced off that orb. Now it also wants that higher high. Right, so if we get that higher high, we can get that. Our next area of concern would be the 3-minute order block, 97-day previous value low. Okay, let's see. we check the gem of all gems, please? Karma. Yeah, we could do that. I'm trying to work with CMC to get that listed. Put a watermark behind the charts with you. That's a good idea. Yeah. I'll see how I can go about doing that. I wonder if there's a way to fix it to one location though, because every time I've tried putting like a picture on my screen, one thing I used to love doing when it comes to like heat maps. I know like TradingView doesn't really have very many good heat map indicators because they don't allow you to import external data. You can screenshot your heat maps, Control V, and you can paste it on here so you can mark it alongside your key levels. Make sure you, when you do your screenshot, you include the price feed like I didn't. One thing that's kind of helpful is also to hover your mouse over top of the liquidity cluster, so that way you can get the price tag in with your screenshot, and then you can include that in your thing. There you go. And that way you can have it on your chart, and you can change the opacity too, so you can put it like set it to back, so it's behind your price action if you want that crazy noise. And you can double click, change the transparency. Yeah, that way you can just be more aware of your levels. But yeah, I'll take a look into that logo idea. That's a good idea. TradingView allows it, like having a ticker in the background. All right, cool. Yeah, I'll take a look at that. Thanks, man. Sell it because your stuff is golden, pony boy. Thanks, man. Yeah. Okay. You're just portraying XRP and slot on zero fees on MEXC. Oh, yeah. I'll just be careful with MEXC. Don't put too much funds on it because their reserves are really unstable. Whenever they discontinue promotions like the one you're talking about, the reserves just collapse like 10 to 20% in a single day. Next TradingView will charge you for opening your browser. Now, Coma suggests everyone to tickle the like button. Okay. All right. Yeah, Bitcoin's starting to get that potential break of structure coming through. We just need to close above that wick. What you don't want to see, I know someone just asked about the difference between like waiting for a candle close or a wick above this area. This is the difference between SFP or a break of structure. So we want to close above this to get that break of structure. If we sweep that close below this wick, then we have an SFP, and we're targeting this low again. So we did get a proper pullback to define this as an SFP. Anytime you can define a break of structure, you can also define it as a key location to prepare for an SFP. But if I were to be picky, out of all these wick levels, we got a wick level here, 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 and here. The best one to go for is the one where there's liquidity, right? This one right here. And you'll have a higher probability of hitting your technical target with your SFPs if you go for the one at the extreme highs where there's resting liquidity to be taken. You might have a higher probability of institutional follow through on that. Even if it's a holiday, you might have larger trade participants prepare for something like that to help them with their setups. Okay. Is there any other assets you guys want to look at? I think I saw another request that I might have missed. Just going through here. 15 drop. Yeah, 50% drop. Welcome to crypto. I don't even look at my spot anymore, just trying to build it back up with trading. Yeah, a lot of problem that people have with their spot portfolio is it starts to generate a bias, an emotional bias, so you get attached to your assets. But yeah, as a trader, you become the assets. So rather than focusing on the market cap of the spot bags that you're holding for it to go up, you're looking at the market cap of yourself, right? You have $1,000 account, and you just grow that. There'll be ups and there'll be downs. There'll be ups and there'll be downs. It's just make sure, you know, you're consistent with your risk management, and you'll be in an uptrend so long as your win rate is good enough to support the average R&R that you go for. XDC, ICP, Dusk. Oh, and someone has to look at Karma. So we'll go and look at Karma really quick. We got to go to Deck Screener. For now, it'll be on TradingView soon. Yeah, so Karma right now is building a double bottom off of its valley area high. So that's bullish. It's really common for assets to revisit valley areas and using the valley area highs as a form of support. But what you don't want to see is close back below, getting that break of structure, follow through into the valley area. That's a form of acceptance, and we tend to get a rotation down to the valley area low during scenarios like that. We do have an airdrop coming up, and airdrops are normally a bearish thing with assets, but with Karma, it's a bullish thing because they do buy back airdrops. So they buy the asset first, then airdrop it. So it causes a permanent increase in its price, especially with its tokenomics where it burns from transactions as well. So the floor value keeps on increasing. So we have this ascending double bottom. You can see that we kind of had this lower time frame, change of character, and now we just need to have the break of this high. This is internal, by the way. Break this high, this will cause a bullish flip. And then we have to watch out here in case there are trapped buyers that could induce sell pressure when we start to return back up. The percentage-based moves on Karma are huge, so just be aware of that when you jump in on these. When we get the breaks, this is like a 20% move to the supply. And then we have a move of like 90% back to this previous high. We got rid of a lot of whales, which is nice, so less worry about situations like this as we start to come up back up to these highs. We knew that there were people here that were that were trapped, and that they got out during this scenario. So when we come back up, there'll be less of those people trapped. So we got to watch out basically around this extreme high from the new people that may have bought in during this. Hopefully no one, well, someone had to have bought these extreme highs, but we got to watch out for that next. And then from here, this might come with a news correlation of it being listed on CoinMarketCap, and then we can prepare for the all-time highs again for Karma. Now let's go to, oh yeah, it looks like we're getting that break. Nice. Got the internal break of structure here in confluence with a less internal change of character here. Everything's kind of internal right now to this extreme move that we got going on here. This is the high here. This is the low here. So everything's kind of internal until this low is breaking or this high is broken. Okay. And that's why I want that low taken before we go up, so we can get that bullish change of character and have more trade participants drive the price back up for Bitcoin. Sweep the liquidity, then use liquidity as fuel to drive it back up. Okay, ICP ducks, XDC. What is XDC? I'm trying to remember that. Okay, let's look at ICP because I remember us looking at that before, and it might save us some time. So yeah, last time we looked at it was the 16th, so just before the weekend. What were we preparing for? We had the squeeze event going on. So yeah, we're looking for price to go down on ICP, and it did really well. So we got, yeah, even if here I was, talking about this being like a bullish break, but with the confluence of the 200 EMA and the hourly order block, I was like, we're probably just going to have a short-lived pump and then drop. And when we got that, we got the close and the drop simultaneously when we got that final break. And then, losing this key level, we were worried about it coming back down through here. And that's what happened first. We broke this first. Price actually came up a little bit and then hit the 50-day EMA, local support, and our demand zone that we got drawn here. Right? So this little guy is helping us induce a range for ICP. But the annoying part about the 50-day and the 200-day EMA is it has a lot of it manipulates the price a lot, because there's a lot of algorithmic bots that buy off of tests, that buy off of the crosses of these EMAs. So, yeah, you have automated systems that will kind of cause this weird crunch in the price action, right? So we got this bounce here from it, the 50 EMA, we got this pullback here from the 200 EMA. So we're kind of ping-ponging back and forth. Anyone who uses the clairvoyant strategy from the course, just know that this is kind of the weakness of the strategies. The 200 and the 50-day EMA will front run some of your levels when you're preparing for your setups and stuff. So here, we'll delete this now. We don't need this anymore. We don't need this anymore. We don't need that anymore. And this has been mitigated. We can keep this here. We can keep this zone as an area of interest, but just know that it has been mitigated, right? But there could be residual buy orders because of the nature of this pump. There could be buy orders like coming back in for people who feel like they missed the order, right? We got the previous highs here. We know that there was residual buy orders because it wasn't mitigated before, and we had that hourly order block, which is a structural representation of residual orders, right? We have this wick level right here that we could watch in confluence with the uptrending momentum. So if we do come down below this green box zone, then we can get that sweep and then return back up. Let's mark here. There we go. What we don't want is a close. If we do get that sweep where price action comes down, sweeps the low, and closes above it, we want to have that close above this local support level I got marked, right? At 357 right here. The reason being is because then we'll start getting acceptance back inside this range if we close below here and below the 50 EMA. So it has the potential to act as a form of resistance. So if we get the sweep, and let's say your target's up here from the most recent pullback from the SFP, then it might be safer for you to wait till we get a close up here and see it act as support, and then use maybe the strong low as a stop loss guard instead. This situation could be like little sketch. That's all I'm trying to say. Just be careful. Still an area of interest to prepare for longs. You know, we've got the 50-day EMA. We got the previous highs here. So just what you would want to look for is the structural evidence of support, and not just try catching the knife like these people did, right? Look for like a bullish change of character, and then start targeting at least the downtrending momentum that we got drawn right here. And I'll get that on there a little bit more thoroughly there. Right? And if you want to validate this trend line as a form of resistance, you can look at the order books to see if there's a sell wall, a large amount of limit sell orders chasing this. Because they'll usually, especially market makers, sometimes they'll chase the trend line to induce sell pressure. And their goal is to see retail stack and front run them, right? Because they tend to want to get out or in near high areas of liquidity, and this is just a manipulation trick most of the time to induce squeeze events. Okay, Bitcoin's coming up like we're planning so far. All right, we mitigated that 3-minute order block. We tapped into it right here. A lot of people, for those who are new to order blocks, a lot of people consider them mitigated as soon as they're tapped. It's because we don't technically know, unless you're looking at footprint orders, like footprint candles, you don't really know where the residual orders might be in this kind of scenario. So a lot of people just consider it completely mitigated as soon as we tap it. Other people consider it mitigated when we tap the equilibrium point, which is the center point of the order block, and others consider it mitigated when it's when price action completely goes through it like this. What I do is I I just trust it a heck of a lot less after it's been tapped once. But once if we have an opposing change of character follow through, then use it as a form of confluence. Or SFP follow through, yeah. So here, yeah, here's still my key level that I'm watching. Right here for shorts. Okay, what's the next request, guys? Happy Monday, Wave Cypher. How you doing, man? If you guys are looking for someone else to learn from, Wave Cypher is actually a pretty smart guy too. He's actually built his own indicator as well. I'm not sure how much you're promoting that indicator anymore, but still a great tool to use, man. Super clear, thanks. No problem, man. All right, cool. What's next in the list here, guys? Manybox. I'm currently also backtesting Aura Block plus change of character on the hourly time frame. Win rate is just 35%. Ouch. Okay. But up 11% in a year. What extra confluence should I try? So you're just using hourly time frames, changes of character and order blocks. I know you're backtesting, and I'd hate to say use Valley area confluence because backtesting Valley areas is a pain in the butt. You could use, what's great with order blocks is also Fibonacci retracement. So let's say, for example, we have a bearish change character here, right? Where price action comes up, pulls back, takes this, and then generates this as a strong high. During the moment where you have a strong high, you can pull from like a low to a high to prepare for potential bounces. High to... Yeah, if you have like a golden pocket, confluence, or 786, I prefer like zoning my areas between the golden pocket and 786. And you can have that zoned area. Let's say there's a golden pocket 786 here. You can use this as additional confluence with your Fibonacci. I can recommend that. It's more of it's a little bit trickier to backtest, but it's a really good way to practice as well. But yeah, when you're bearish, you want to focus on your low to high pulls, and when you're bullish, you want to focus on your high to low pulls. Like this is internally bullish during this moment. You can pull from this high to this low. But in some, what I really like to focus on though is making sure you have those forms of confluences that stack with it, because I don't like trusting Fibonacci blind. So if we pull from this high to this low here, for example, we got the 786 has the most tied confluence in that scenario. So the 786, we got our 15-minute order block, we got our point of control. So this is going to be something I listen to fairly well. The good thing about the golden pocket, though, is we have liquidity resting here. So the golden pocket is basically just telling you where liquidity is. And this would be fully mitigated by that point. But if you get a reversal here, you can listen to that and look for your most recent like little demand zone for your target. But yeah, when you're building your entry-based criteria, you got to make sure you have exit-based criteria too when you're doing your back testing, so you know where you're targeting after all your rules are met. Otherwise, you're depending on emotion to dictate your exits if you don't have exit criteria, and you can't back test that, right? It's not going to give you like good results. If your exit criteria is something simple like a risk to reward ratio, like a 1-to-2, or if you're going for Kelly factor risk management, like a 1-to-1, Kelly factor, I'd recommend if you're doing stuff like that, you need to have a high win rate. I prefer like 65% or more. Otherwise, yeah. There's nothing wrong with a 35% win rate. I know it sucks, but that also, what really matters about the 35% win rate though is you need to make sure you have a high profit factor. Like you need to have trades that average with around like a 1 to 3 basically. At 1 to 2, at a 1 to 2, you basically break even around 35%. But if you have lots of 1 to 3s, you'll be profitable. Every loss will be, you can absorb 3 losses from 1 win with a 1 to 3 risk reward ratio. If you're consistently going for stuff like that, and that's being hit 35% of the time, then that's, I know it's not great for your mindset having a low win rate, and a lot of people struggle with that, but it's a mathematics game. Okay. Don't forget XDC. Let's take a peek. XDC mainnet. Okay, so it's its own network. Not a fan of KuCoin's charts. Look at BitGet. It's got great liquidity. Bybit's got great liquidity. You can look at Bybit's. It's a perpetuals chart, so it might not have all the history though. So just pull this up on the daily. Oh no. Okay. So based on this chart, it's in a forever downtrend. I'm not sure if that's... I don't think I've done TA on this thing before. Let me look at KuCoin. There we go. We got more of the data here on KuCoin though. So how old is this bad boy? There's our dinosaurs on the chart. It's a good indication that it's the whole history of the asset. It's not always accurate though. 1,070 days. Okay. Coming down towards supply. Mitigation. All right, I'm going to pull a macro valley area. Just because this thing's been ranging since the dawn of time. All right, and what this helps us identify is we got double distribution going on here. So we got 2 strong key areas of interest where most of the range-bound price action happens. This is where most of the fast-paced moves occur. And then we got more range-bound price action here. And then a little bit of interest here, right? And you can draw like a box just to help validate what I just said, like this. And you can see, let me just make this white. We're falling into this box zone now, which isn't great because that normally would mean we'd be falling to the opposite side soon. And we held it as support, which is insanely common, right? Volume shelves act as a form of support. But then we got that break of structure into the valley area. And right now we're on a 1-day order block. So if that order block doesn't hold us up, we're going to be falling down to like 0.03422, which kind of sucks. We got previous highs there for a good confluence. But yeah, prepare mentally for a potential drop if we get that continuation posture in the lower time frames. And we'll dive into lower time frames just to find that out really quick. We got downtrending momentum here. This is the pace of the sellers. We got internal evolving momentum. So basically what's happened is we had a faster pace move, and then the pace of the sellers kind of like sped up a little bit. People are getting a little scared. And you can see how price action is starting to pick up the pace as we came into this area too. And this is the daily order block that we got, the last little demand zone that we got left in this area of interest. And we start falling into that fair value gap. Okay. So we got a daily order block right where we're standing. Oh yeah, so we had a a bullish change of character here. So when we broke this, it became a bearish change of character. Yeah, based on this posture, it's might as well call it a break of structure. All right, so this is kind of like the last little thread it has left of support on the daily before potentially falling down aggressively to here. So if you're trading this, just be super cautious. Please, 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 please have your stop loss in place, right? You do not want to be caught in a losing trade, right? You don't want it to come down. Let's say we get a bullish change of character here, right? We come up, we sweep the low, then we get a bullish change of character here, right? And you have your stop loss here. If this gets stopped out, not only will you be wrong, you'll be insanely wrong, right? It will come down aggressively, all right? So just be super cautious. We can look at the lower time frames to see if we're starting to get that posture, but let's see what we got. So we got that big drop like everything else. We've started to flip bearish. This is really choppy candles. We're on the KuCoin's chart, so low liquidity. KuCoin and Mexi do not ask for enough money when it comes to listing. So you tend to get these gaps in these candles from like slippage issues. So we're losing momentum, right? What's happening right now is we're testing these previous lows, right? We had an SFP to front run this change of character. And now we're on our way down right now as we speak, likely to the VWAP, right? A good area to watch out for is this 15-minute order block. But if I'm being honest with you, I do not trust order blocks on charts like this because it's very easy to kind of manipulate the price action on low liquidity exchanges. Sometimes it thinks it's an order block when it's kind of not. Order blocks are a form of candle structure, right? It's a 2-candle pattern. And those 2-candle patterns are supposed to tell you a story of potential residual orders. So you just got to be a little cautious that these might not be trusted. And that's why you always wait for structure to dictate that it's being acted as a form of support as well. So here we could get that bounce, but overall I think that we're coming down towards at least this VWAP. But if we get that lower low, then we could be going much, much further down for this asset. And you might even see relative weakness with this asset during that scenario, meaning it will drop while everything else isn't. Okay. I hope that helps you out. But yeah, right now it's looking really rough. What I like about it is the fact that, we are at that daily order block and we can see that the order flow looks great for upper side liquidity. But you can see what I mean by trying not to trust too many of these order blocks because we have printed 5,000 of them right here from the awkward price action, the awkward candles that we get. There's lots of slippage going on. But yeah, low time frame. This is the pathing that I'm expecting is this here. Coming down, likely a bounce here. But overall, this is where I'd prepare for that bullish change of character. It would be even better if we swept this low a little bit first before preparing for a long to front run. If we do get that sweep, this would be a front run to the break of this high. And then this high would give us a break of momentum and we can start coming up towards all this liquidity that we've formed from this downtrending momentum here. This is great market structure that dictates a really good order flow in the forms of stops and liquidation levels along the way up. So I'd start expecting a longer trend-based move back up to this high if we break this momentum and get a more of a macro change of character. The more macro change of character won't happen unless we break this high, or if we take this low first, then the newly unclaimed high right here. A weak high. I hope that helps you out, man. A little bit of a sensitive one, so just be careful. Okay, what we got left in the chat here, guys? Japow. Yeah. Did you coin that term? I know what the term represents. Like, it's an event-based tagging, right, for Jeremy Powell's events. But I wonder who coined that. Yeah, profit factor is a 3.4. Oh, good job, man. That's pretty good. But for a year, it's good to automate, right? You're going to get more from that than you will get from the banks. That's for sure. You'll probably get 5 times more from that than you would from just holding it in a high interest savings account. So you'll be able to combat inflation with that strategy. Sneak peek of Bitcoin on the 12-minute. Yeah, 12-minute. We got like this awkward, or just dollars away from getting a dragonfly candle. It's not looking great right now. So we're coming back down to test this 15-minute order block, right? Giving us a pullback, but it's an inside bar pullback, so it's not a healthy pullback until this high or this low is taken. You cannot consider this a proper pullback until the mother bar candle or inside bar candle has breached its high or low during its pullback. In market structure, you'd skip this when you're doing your pulls. But we don't know yet. There's still 8 minutes left on this candle. A lot could happen. A 12-minute, for those of you don't know, it's a good front run time frame. You're front running it's kind of an oddity. You're front running the 15-minute time frame structure, and sometimes it gets you in a little bit before other traders. But the 15-minute has more trade participants than the 12-minute, so just be aware of that. How the 15-minute candle closes, every fourth candle you'll get an hourly candle close alongside of it. So if you get an hourly candle close and a 15-minute candle close, and you get a break structure and both time frames simultaneously, you tend to get a lot of trade participants. So it's really good to wait for those candle body closes on the 15-minute. But the 12-minute is great for front running that. There's nothing wrong with that. Just make sure that it syncs well with what the active 15-minute candle is looking like, because sometimes, because it's the 12 and the 15, they kind of displace a little bit by 3 minutes for every candle close. So like right now, for example, they'll both close simultaneously. That's a good example of how you could use like the 12-minute and the 15-minute simultaneously together on like candle closes and stuff like that. Other times they won't be in sync. They'll be out of sync on the next candle, right? And that 12-minute is going to close before the 15-minute. So you might get a 12-minute SFP before you get like a 15-minute one, for example. Try to front running it as a 12-minute SFP will get you in 3 minutes earlier. Um, 12-minute hangman engulfing to the downside, but it's broke structure to the upside again, I think. Yeah. You got this break here on the 12-minute. So it's not really one that I would trust. Just be a little careful. Yeah, and we can see we're already getting buy pressure coming up, a buy shadow wick. So it's easy to say. It's hard to trust right now. But yeah, if we get you're right to wait for the next candle to dictate action though. So if we have like that hangman candle, you'd want it to close below that candle, especially if you had a smaller inside bar. Yeah. So yeah, I would hold off on that one for sure. On the 15. We're making our way up slowly. This is a 3-minute time frame now. Here we go. So this is the moment of truth. Let's see if we get that SFP sweep. All right, we got. This is exactly what we need to have right here. We need to have this candle close now below this wick, and then we have an SFP. If it closes above it, it's not a short. We have to wait for it. If we get a close above it, doesn't mean I'm not going to be preparing for a short, but it does mean I need to wait for it. A different form of market structure to determine a short. Whether it be a break of this low for the change of character, or a new strong low up here to be broken for a change of character. I prefer like this scenario. You get better risk to reward ratio. This one will come with the confluence of losing acceptance into the 97-day valley area. And what you can do during a scenario like this is you can go back to your 24-hour liquidation heat map. You can refresh. You can see how much liquidity has been taken. So $26 million, yeah, a little over $26 million was taken on Binance. And we have a little bit of a higher level though at 93,450. So 450 is a good area of interest to watch. So we might actually get that bearish change of character scenario if we come up here and take this liquidity, assuming it's used as exit liquidity. So this would be a great spot to prepare for us to hit and come down. It would feel awkward for a lot of traders to take the short if this isn't taken. But what you could find out is to see if this is guarded or not, right? This liquidity could be guarded. So it could be the liquidation point for, let's say, someone who entered a short here with a large amount of funds, and they could guard it with a limit sell wall. All right, we just got the SFP. No, what is that? I hate those scenarios when it closes right on it. Oh, yeah, we got the SFP. If you're really unsure, what you can do is you hover your mouse over top of the candle, and you'll notice on the top left-hand side right here, this is, you'll see OHLC. It stands for open, high, low, close, and you want to find out where it closed. So we have our price tag over here at 93,312.7, and we have our high here at 93,200. Sorry, not our high, our close at 93,312.30 cents. So this is an SFP by about 40 cents. I don't normally trust that because that could be a break of structure on other exchanges. When it's that close, it makes me a little nervous. But the technical target of what just happened, because it is technically an SFP, is this low right here. So if I took this trade, and I'm not, by the way, if I took this trade, you'd be targeting here in hopes to get the change of character, and that change of character would dictate a continuation for you. But otherwise, this is where you'd be targeting. And if there's any front run confluence like this in these previous highs, you'd watch that initially first. Your stop loss would be right above this wick, and you'd have 2-year technical target a 2.84 risk to reward ratios, meaning if you risk to lose $100, you gain $284 if your target was hit, minus fees, right? To your barrier is a good thing to watch as well. How much R&R would I get if I was forced out of the trade, if there was opposing confluences here? And that's a 1.46. It's really healthy to make sure you're looking at the risk to reward ratio at areas where you have a scenario where price action is going to come against you. And unfortunately, you won't have very much time on the 3-minute time frame to kind of dictate that exit plan. So you'd have to go into like the 1-minute time frame to see if there's like a bullish change of character. And even then, you might get a flip instead. And a flip might be enough to get out and then try to find a new entry. And a flip, by the way, is just like, it's kind of like getting a change of character, except you're not getting the lower low to dictate the strong high to be taken. But we're starting to get that good reaction though. What about 15-minute SFP? SFP technical target for the 15-minute time frame is way down here. So we got the 15-minute SFP already with the same candle that we got on the 3-minute. So we have like a multi-time frame SFP occur during that one candle close. But their targets are different. You just take them one stage at a time though. You can't assume that we're going to be hitting this down here. So 1 to 9. The 3-minute, what was nice about the 3-minute is that it gave you that front run. Instead of waiting for it to close here, you were able to get in here. But you got to take it stages. If you have a multi-time frame SFP, it's good to watch, the lowest time frame technical target first, and then, evolve it your way up. If you get a 5-minute, we did not get a 5-minute. 12-minute pullback is down here with the 15-minute pullback. And with the hourly, do we have an hourly SFP? We do have an hourly SFP. So that's a good confluence. When you're having a high time frame like an hourly, that's pretty good. But what I'm worried about, this is why I'm not in the trade. What I'm worried about is the fact that we do have resting liquidity up here. So we could come up for another sweep. So it makes me a little nervous to jump in. And if I miss the opportunity, then awesome. Some of you guys probably jumped in. I'm not going to lie. I can't control what you guys do, but some of you guys might have already jumped in. But this is what's keeping me out. It's the liquidity here. What I could have done to find out if this is guarded though, is I could have gone to the order books to see if there's a sell wall protecting that liquidity. And if there is, then I could have used that sell wall as my stop loss guard. So here, and this is the order books. This is not the nicest order book in the world anymore. They kind of change things around, so I'm not a big fan. But here you'll be able to find out if there are sell orders. And what you want to look for is these giant spikes in the depth chart. And if you see a giant spike, that means there's a lot of interest in that area. And that's what a sell wall is, or what a buy wall is down here. Oh man, we're almost hit that target. So here, if you're seeing a reaction like that on an order block, just be a little cautious. We're trying to currently use this value area as a form of support. We're trying to use these previous highs as support. What we want to see is a close below these highs, which we got, which is great. And now we got to see, I guess, the following candle close below here. And if we get that change of character, and then we're way more likely to go down. So let's break this. This is what you want if you're in the short. It's that area to be broken. We're at momentum right now. Let's see if we close below it. So the pace of the buyers. There we go. Target hit. So 3-minute target was hit. Now you need to see the 15-minute target hit, which is way down here. But we have a lot of opposing confluences that can prevent that from happening. So let's go back to the 3-minute to explain that. So here we have our orb, which is the first 15-minute candle print of the session. Kind of helps dictate how automated market makers could be calibrated for the day, right? And so these tend to act as a form of support, like we saw right here, like we saw right here, right? And they can act as a form of resistance when we're below it like this. And internally, it's the same. So if we get inside this area, we could ping pong, seeing this act as a form of resistance and this form of support. All right, we got that target hit. So if you did, hopefully you took some profits. You can have your stop loss to break even for sure. And then let the rest ride to our next opposing confluence area, which is here. Okay. I'm looking at MEXC. It broke that high. Do you recommend just looking at Bybit for Bitcoin? I would recommend Bybit over MEXC's charts. But if you're trading on MEXC, it's good to make sure that you see the same kind of confluence. Sometimes if it's that hairline, if it's that close, then I would list a Bybits over MEXC because Bybit has way more liquidity than MEXC does. By a landslide. But it is healthier to make sure that whatever exchange you're trading on, that you see the same confirmation occur. All right. There's our target here, hit. All right, guys, I do gotta go. I hope you guys learned from this live. We got we're doing lives now every single day at 10:30 a.m. I figured it was a better time for us to do those lives, and I changed my schedule around and outside of trading and outside of the community to kind of like make this work. So yeah, 10:30 a.m. every single day, Monday to Friday. Yeah, I'll be doing lives with you guys on. And today we are starting our new community call, which is trading masterclass call. It's going to be a free call for everyone to join, not just members. Just for this week, we're going to be talking about risk management. So I'd rather, non-members learn about that kind of stuff. You know what I mean? It's really important. So if you're interested in taking that class with us today, it's at 4 p.m. Eastern. We're focusing on learning about risk management, leverage, funding rate fees, and all that fun stuff. So you just got to join the Discord down below. Whether you're a member or not, you'll see in the announcement section the link to join the call at 4 p.m. Eastern, okay? Alrighty. Well, thanks everyone for watching, subscribing, sharing, all that fun stuff. You have yourself an amazing day, and I'll see you in the next one.